afternoon, ladies and gentlemen. Good afternoon. Good to see you. Hey, Matthew. Hi, Ian. Good afternoon, Nadia. Good to see you guys. Alrighty. Where are we sitting after yesterday's antics then? We've just had some jobs data out, so we'll quickly check over on that. So this afternoon. So let's just turn off that for a moment. There we go. So initial jobless claims from the US of the A. We had a 227k down from 242k prior figure. What? Their forecast was exactly the same as the prior figure. Okay, that's bizarre. But anyway, I mean the forecast wasn't even it wasn't even that far away from what happened. We got a 227k reading, as always, very, very sustained levels from the employment side of the US of A at the moment. Nothing really to record there. And that's it, guys. That's as exciting as things get today. And I mean, even the impact, look at the impact in gold. It's done absolutely nothing. As a result, we had this little bump down here. Didn't really amount to too much of anything. Yesterday's markets, though, let's talk about that. Do a bit of a review. So yesterday was a bit of a mixed bag. We had some pretty decent winners. We had a couple of losers. It was a very sort of even day for the wins versus loss ratio. Track record at the moment. We have officially breached the £450,000 point, which is brilliant. We're up at 455, 505.82 currently. This week showing a consistency in the returns of over 1% gains. I think the week started off on the 20th, wasn't it? Or 21st. It was the 21st. So 21st, we did 1.6, 22nd, 1.05, and yesterday at 1.42. Today remains, as of yet, flat. So against all the odds, I mean, considering that we've been feeling like we've had so many losers with our winners, it's actually amounting to a fair bit. I think this is really down to the risk reward, isn't it? That's what we've been looking at. Very nice consistency in some decent risk rewards so far. In terms of the amount of trades that we've had, we have actually had quite a vast number of trades this week, regardless of the win-loss ratio. So on your screens now are currently the trades that we have taken over the course of the week so far. So this is quite a bit of trading volume. Natural gas, NAS 100, Aussie CAD, Dow, Corn, Gold, GA, GU, NC, EU. A lot of variation in the trading assets that we've had as well. So far we're sitting on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 trades so far that have been taken this week, amounting to a weekly return so far of 4.12%. We're sitting at 17% on the dot for the monthly return so far, which is really nice actually, and a big step forward from where we were at the beginning of the week. But a 4.12% weekly return so far, and we're still on Thursday. Again, not too bad at all. But look at the absolute mishmash of winners and losers. They're all over the place. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have 9 losers out of 19 trades. So we're basically at a 50-50. It's 49-51 win-loss ratio at the moment. So yeah, I mean it's not great, is it? You know, it really is a coin toss. It's a coin toss week. That's what we've been looking at, and frankly, that's what we've been looking at for all of the weeks previously. We really have been. It's been like this constantly. There's a tug of war battle between the winners and losers. As we can see here, we have taken a deduction in our trade win percentage. It was 57.95, I want to say, at the beginning of the week. We're now trading at 57.8 on the trade win loss ratio, which again is fine, but we're really, really coming down to that cusp of my mental sort of lowest area where I want to be. You know, so long as we're winning 55% of our trades, I'm happy. Something needs to pick up if it drops below that. I really, really want to sit at 55. That's where I'm comfortable. So yeah, just watching that one attentively, I suppose. Not exceptionally close. Not sweating over it every single day, looking at it, but it's yeah, certainly on the attentive side at the moment on that one. But yeah, I mean, nevertheless, we're still looking at pretty good gains, aren't we? 17%. It's not too bad. I think we had previous months was looking at a fair bit more. I know August was up in the 30, like low 30s, 34 or something. September was high 20s. And so, yeah, we're looking at a gradual decline leading right up until Christmas, where we will probably see the weakest month of the year in our trading performance. But it's interesting regardless. See where we're at the moment, and also to enjoy the performance of the fund even throughout these dodgy market conditions. And I guess you can take that with a pinch of salt. Not exactly dodgy per se, but yeah, it's all right. 4.5 times in 1.5 years. Yeah, that's right, man. Yeah, don't get me wrong. I'm definitely happy. Yeah, I'm definitely happy with the performance overall. Yeah, it's not been bad at all. I mean, total return 355%. I mean, that's really going on something, and it's bloody superb if you think. We have never risked more than 0.25% of the account ever. Not a single one. Not a single trade ever risked more than 0.25% of the account. So yeah, I am certainly head back in the game for that kind of thing. You're absolutely right. So yesterday's gold sell-off was absolutely superb, wasn't it? We got that breaker structure, counter trend, which is what we were ultimately looking for in order to get in on our trading opportunity. We had one long opportunity, we had one short. The short was the one that triggered, and that was nice. It was 1 to 2.5, but look at the size of the sell-off that we had. It broke all structural points, all the way back down to a low of 27.08. Absolutely huge. And if I was able to manage this trade out, there was not a single reason to get out of the move until the counter trend breaker structure right down here. That's the point where you would have got out if you were managing the trade. So just to put that into perspective, if this was a managed position, your exit would have yielded a 1 to 10.18, which, I mean, that's great, isn't it? That's absolutely brilliant. I mean, I'm happy with my 1 to 2.49, let alone the 1 to 10 that was on the table yesterday. So that was really something. Beautiful crushing move from gold there, really taking out all of the retail longs at that stage and clearing the way for the institutional investors to get back on side and start accumulating more orders down at around 27.10 and 27.15, which is where we saw the majority of that accumulation take place. But it has had a nice rally back since then as well. We're now trading upwards of 27.30, currently printing at 27.38. If we can break structure above here, you guys, I think, know what's coming. I'm looking for a gold long breaker structure above this area, target profit, exactly where we took the trade to yesterday. And that's going to be a pending order at 0.25%. Good box standard trade. So stop loss is going to be probably at about there. I mean, guys, it's the identical trade, the inverse trade to the one that we took yesterday. And I'm not looking for anything more. So I'm not looking to take the trade back up to the previous high or anything like that. Just simply trading within the same margins as where we were yesterday. So that's pending order, ready to rock and roll. I'll just give you guys a second to add that one in. So stop loss 2740.18, entry 2741.60, target 2747.81. Looking at a 1 to 2.46 risk reward based on a 0.25% trade. No major fundamental catalyst. We've already had the major fundamental catalyst for today, which is the jobs numbers. Jobs numbers were sustained. No major surprise from them, and so therefore no major surprise in the markets. The breaker structure for this one is actually taking place now, but I'm not going to go for that. I want to clear through this area here before going long. So that's that one. Right, so let's take a quick peek at oil. So oil came in to stop us out. A lot of these trades I've already cleared out now, guys, by the way. They're in the track record, and so therefore I've cleared them out of the charts. But it was a stop out. We went long here after the break, close, and retest. did quite well, came out, stopped us out, and then went to our designated TP. Now the TP, as you'll notice, is lower down than it was here. That's simply because I'm constantly following the upper limit of the trend. So that's where I'm really aiming for. Now, because of where oil's trading, this is a rock and a hard place. We can't go long because it doesn't have the margin, and the short at the moment is now being blocked by the median, which is, I would say, pretty bloody significant in the middle here. So I don't want to be taking a short above this level because it's just too strong. So I want to either look at the long coming back from 73.97 down here, or alternatively, I would like to look at a long after a break close retest of this area. Maybe even looking at this as the area to get into the trade. So this is the sort of block for the longs, and then looking to get into the high after that 76.75 breakout. So we get above there, boom, off we go. And then we can look at taking the trade up to, not even that's a decent trading margin to be honest anymore, is it? Not hugely. I would say the more consistent level is the one just above that though, at around 77.60. And that would be a decent enough trading margin. So it's got some work to do, oil. It might not be ready for us before the weekend, I'm not entirely sure. But nevertheless, it's got opportunity there. We just need to be good about the timing. With gold, we're just about in, almost, not quite yet, bear with. Yeah, okay, that's still there. Yeah, so we're just going to nudge into that one, I think, probably whilst being on stream. Let's carry on then. So Aussie CAD, yesterday's short, very, very nice return, 1 to 2.32, good breaker structure. We ended up getting the retest as well. I believe I told you this in the stream that we may indeed get the retest anyway before it continues down, and we absolutely did. Got a beautiful retest of liquidity, and then bang, institutional sellers came on side, got straight down to TP at 91.67. Actually, from there was really nice buyback opportunity as well. The trade was absolutely flawless. But unfortunately, at that time, I was off the screens and not available. So it's besides the point. If you were, though, still some really nice trading opportunities. And it's nice that we now actually recovered the losses from the Aussie CAD this week, plus some. So I think if you actually looked at the tally, we're about 0.2% up or so from the original Aussie CAD trades. We've had 3 Aussie CAD trades, 2 losers, 1 winner, and we're up 0.2-ish%, 0.22%. Which is really nice to see. Now that we're up at this area again, you guys know what's coming next. We are indeed looking for another short in the Aussie CAD. This time around, things are going to be a little bit different. I'm actually going to be going for something a little bit more intricate here this time around, and that's this area. So this might seem like a cat-handed breaker structure point, given the fact that we've got this low here and this high here. But this one, there has been some interest and some aversion, and we've had this dip down here and this immediate bounce back. So I think if we end up getting down this far, it's going to be out of the ascending level, which you guys may have not noticed originally, but here it is. So that's the ascending level there. We'll be cleanly and fully outside of that ascending level by the time we reach this area. And I think that's going to be a decent enough path of least resistance. Of course, it doesn't come without its risk, but it's still relatively good. There goes one of London's finest fire engines, absolutely blasting through here. So that's where we are at the moment. So pending order, target profit is going to be 91.67. We're looking at an entry point of 91.83. We are looking at a stop loss at around the 91.90 area, about the 50% point between those two zones, and that's yielding a 1 to 2.46. So not too bad at all, considering the original trade was a 1 to 2.32. Okay, so this is a 1 to 2.46. Not bad at all. So that one is going to remain short for us. Aussie yen is a no can do at this moment in time. Yep, nothing there for me. Aussie NZD, the fund is saying no to that one still. Aussie dollar is a long pending order, but do I even want it anymore? Do I want it? That's the question. What do you guys think? What do you guys think about the Aussie dollar? It's still worth a run to the upside. I mean, there's no real reason why not. It's just where the market's been trading from, trading to. I'm not entirely sure anymore. I'm not entirely sure. What do you guys think? What's the thoughts on the Aussie dollar team? You got any ideas? You like it? You don't like it? I'm just not entirely sure it's got the legs in it with how much time we've got left in the week. You had a long marked out too? Okay. Yeah, do you know what? It's not actually doing any harm being there at the moment. I still agree with the overall trade idea, and there's no real reason not to have it in. The market's not trading it's not trading a real far distance away from it, and we have recovered quite well today. We're only 0.27% up, so it has a lot of room to breathe. If we look at where we're trading from here and then looking upwards of there, that's going to be a 0.6% move, 0.678, 0.86% move. It's a big day for the Aussie dollar in general, thinking about the ATR, but at the same time, it's doable. It's definitely feasible, and certainly overnight. So I think for the time being, probably going to leave that one live. So CAD Swiss, honestly, team, nothing there at all at the moment for me. I don't want to be caught in any slow market like that right now. CAD Yen had a nice dip. Oh, beautiful retest though, isn't it? Look at that. That's an absolutely stunning retest liquidity there. This will be a daily one, absolutely. Look at that daily chart, bang, big breaker structure, beautiful retest taking place. Nice level of liquidity to retest as well. Got the bottom of the dip there. We've got the point at the highs here, which is like a really decent level of liquidity as well, probably in about that area. So this is now our trading margin. Go back down to the 15-minute time frame. Nadia, this is what I'm talking about from earlier session. I hope you will be taking note here. So really nice structural area on the daily. The market state structure is definitely on side with the daily, yielding a positive bias for us if we are interested in taking longs. And so we've had a bit of a rally here, haven't we? We've had this spike through, which could cause a bit of a concern. But I think with the nature of where we're trading away from and with the bias of the daily trend on side, I'm willing to take a risk on this CAD Yen and look at a pending order at around 110.12. Pending order, again, 110.12 entry, stop loss 109.96, target profit up there at that 110.57 area. So that's yielding a 1 to 2.84. You could comfortably sit with a 1 to 2.27 and have your stop loss down here. I think for me, I'm going to go for bang on the 1 to 2.6, and that's going to be a stop loss of 109.95. It just gives us that nice room to breathe. If any wick throughs underneath here, we're going to have decent amount of room, so we're probably going to get away with it. It would be nice to think that we will. We've had some sort of fake outs, and then we've had some dips below this level before. And if we look at that area, we've had all these lows that have come down here in the past and sort of stopped at that 109.95 area. It's not foolproof by any means, but it's something. And so therefore, I think that would be a pretty decent level to have a stop loss at that 109 area down there. So just to confirm, stop loss 109.95, entry point 110.12, target profit 110.57. It meets the fund's parameters, daily trend, retest continuation, breaker structure entry point for this one because we've already actually hit the retest point of this move. Looks really good. Yeah, looks really good. Let's go. Long. Euro Oz. No. No, because the entry point would be at 162.50. Exit would be 162.70. Stop loss would have to be under there at 162.30. So the risk parameters aren't there for that one. And we could look at a short, but then we'd have to beat the low at 161.87-ish. And then around again at 161.50 with stops at 162.060. No, wait, way higher, 162.12. So yeah, no, that's not going to work either. Nothing there for us. Euro Yen. It's another one of those yen crosses. Obviously, we took a hit in the euro yen there, guys. This was one of our fateful losers, along with the GA. No, not the GA, was it? The G CAD. Or was it? No, sorry, it wasn't even the pound CAD. Sorry. It was the pound yen, pound dollar, and NZD CAD. Those three shorts were all losers. And we'll get onto them when we get down the list. I actually prefer the CAD yen setup, and I don't want to be doubling up on the same trade idea. I don't mind trading more than one yen cross, but I don't want to be doubling up on the same exact trade idea, which is what this is. I do prefer the euro yen for the sake that we have actually been trading in a range, and now this is the break, close, and retested. This is what's known as positive imbalance being confirmed. So we have equilibrium, same highs and lows, price bouncing between the two. And then we have positive imbalance, which is when the market confirms a breakout. And the more more buyers are entering the market, and that's now continuing its upward trajectory, or so we think it's going to at this stage. But I still am more of a fan of the CAD yen. The reason for me being more of a fan of the CAD yen is because of this daily chart. Look at this daily chart for a moment here. We've got this really nice big move up. It's taken a while, nice consolidation, sweeping move, but this is a beautiful break, close, and retest of that level of liquidity. It's so clean and really does pave the way for that move higher, back up into this area in here, which is a really, again, nice trading margin. Look at the moves that we've had here over the years. Really decent stuff. So it just makes sense, this one. It really does. So I'm quite confident with that. We'll just have to wait and see which way we go. Obviously, it could be a bloody loser. Who knows? So Euro NZD. Yeah, no, I don't think so. Not with this recent price action. That could have been a nice entry point there, but we're too far away from that now for this intraday stuff. Yeah, it's trading in dead space. Unfortunately, it's right bang in the middle, isn't it? We could definitely trade it long from 179 and trade it short from around 170.55, but no trading opportunities for us here at this stage. Euro USD was a winner from yesterday. Really nice trade as well. Really happy with it. At this stage, though, guys, nothing to be said about it. I don't want to be getting involved in anything here. We took the long, we won the long. We took the short, sorry, we won the short. But that's about it for me, for the euro dollar for the time being. Pound against the Oz. We had a nice winner in this one this week as well. Obviously, cleared down now. This isn't actually too much of a bad move at all. But again, we're a bit behind the curve here. The longs really took place this morning at around 8 a.m. And now it's kind of coming to a grinding halt. We are coming up against some areas of liquidity in here. So that's, we need to be aware of that one. Could we look at the potential short? Where's the target profit going to be? So I would say that we've got this area in here as a potential area for a short TP. And this one could be over and done with quite nicely. We've already pushed in the liquidity here. It's going to... I don't know about this on reflection, actually. We've got the big area in there, haven't we? That's like the median of the margin. I would like a push further into liquidity, to be honest. So I think in order to take this trade, I want to get a push deeper into liquidity. Maybe get a rejection of 195.24-ish, and then we can get that push down. So this is not going to be a pending order, unfortunately. This is the anchor point that I'll be looking to break structure on to enter. Okay, so we're currently trading under that at the moment. We break above that, we can then set the pending order for our short here once the price action's trading here. Okay, so that then becomes the short, but only when we cross up into liquidity up there. And this, that's looking like, what? That's a crazy risk reward ratio at the moment, a 1 to 2.77. So that's really nice. And there's no reason not to have it that good, but we are going to have to wait for the market to push up into liquidity further. I ideally would be looking for a rejection of like this area, for example. Okay, so short, pound against the CAD. Nah, I'm afraid no can do on that one. Swiss. Yen. No, definitely not. Cable. Yeah, all these are looking exactly the same. So the reason I'm skipping all these pound pairs, folks, is because we've got this is the low, okay? That area in there. And at the high, whoopsie, at the highs, we have approximately this area here. That's the margin we have to work with, right? That's where we're trading in now. Never mind this. This was really nice. W reversal, really nice move. Fair enough. But we're not trading down there now. We're trading in here. And this is a shit show. I'm not happy with anything inside here. So it could be that I say, look, okay, we've got a nice shorting opportunity. Let's say that we short beneath this area. So that's going to be a breaker structure trade, and we'll be shorting back down to the lows of the W reversal. We've got a TRF situated around there, and that's it. So we've got one TRF, we've got a nice trading margin, and we take that short. But the thing is, the market's got a long way to go for there. And we are in a bullish cycle now. Okay, we've got a lot of institutional buyers in this asset at the moment. We have got a long. Okay, so we've got this area in here. Okay, which is a decent level of liquidity. Does the margin work? Margin's pretty tight. Basically the same margin as this. I still think it's a high risk. So cable at the moment for me is going to be a no-go. And if we look, a lot of these assets, they're exactly the same. Pound Swiss looks much worse than cable. Pound CAD looks identical to cable. Pound against the Oz is probably the cleanest one out of all the pound pairs. And that's why it's the one that we've got the trading opportunity in. So, NZD CAD, we took a loss in this one. The trade actually panned out in the second wave, but it took us out before it got down there, unfortunately, which is annoying. So, we are at this stage looking at NZD CAD BCR for shorts. So, if we look at this area in here, that's the major inflection point. You can see this here just by looking left. So, really, really nice inflection. Big one here, big one here. Big one here, and now we've got to break, close and retest this negative imbalance being confirmed because it's on the downside, not the upside. So more sellers entering the market than buyers. So now what we're looking for is a breaker structure. So as we go through here, we can see this little point. It's 1, 2, 3, big breakout above. Okay, so I'm going to get my bar, drag my bar across there, bang, entry. Now we know where an entry is. We know where we're trading away from. So we have that two pieces of the puzzle there. Where's the target profit going to be? TP, ideally, is going to be at the next major inflection point down or up. In this case, it's down because it's short. That's where that is. This is quite a big trade. Okay? It's quite a significant trade. We do have this area in here that we need to contend with. Doesn't really make too much of a difference to this point, but it does here and here. Maybe increase the width, drag that down a touch. It starts to make a little bit more sense. That there is a decent enough margin to take a trade in, I believe, before the TRF, before our TP. The TP, I'm going to drag the zone up just a touch. I don't want to be too greedy here. I don't want to be over optimistic. So the short then becomes entry underneath the breaker structure, target profit down at the major inflection point high, and the stop loss, which is going to be there. And the stop loss at this stage is going to be, I don't know if that's my OCD kicking in or something, but I'm just going to have it as a 1 to 3. And that's going to be up at around 83.25. It's a pending order 0.25. Basic standard UTCF trade. Yeah. And of course, we have a long. Don't forget about the long with the NZD CAD. So long, breaker structure here. Breaker structure because that's a big inflection point. And this, we have a break close retest of it. And then the TP for this one's going to be pretty tight. Okay, because the TP for this one is going to be in there. And that is a pretty tight TP. Trading margin is not terrible though, which is why we're considering it. So then we have the breaker structure, we have the entry point, we have the TP. Let's map it out, see if the risk reward yield works. Whoopsie. And there. Stop loss, going to be about there. So that's a 1 to 1.93. That is good enough for me. So yeah, and that's going to be the long. So a long and a short in the NZD CAD. The bottom one is obviously a lot nicer, but it's the markets. We don't necessarily get to choose which way we're going to go, unfortunately. So that's that. NZD Swiss is was a nice trade idea, but no longer, I'm afraid. We'll have to revisit that one. Just trading too far into the margin. I'm going to put an alarm in back at 52 again, see if it comes down there. Because I'll consider it then. NZD JPY is a complete and utter no-go. NZD USD. So that's actually got a break close and a retest above the structural point. And that's retest. Excuse me, it's retesting the 60-30 one. Yeah, that's a rock and a hard place. No, I'm not having that one, team. I'm afraid. I'm not saying the chart looks bad, because this most recent part of price action actually doesn't look bad. It looks all right. I'm just not comfortable with where it's trading at the moment. I think I would probably be comfortable if we had the breakout of this area here for the short. So that would be the short target. That would be the short entry, and this would be the short target. And we'd be looking at clearing that margin. I don't like the long necessarily, not hugely. We've already had one rejection of this level of liquidity in here. This would be representative of a no man's land. Actually, I tell you what, guys, on reflection, that's not looking too bad, is it? Yeah, I certainly wouldn't be trading in here, okay? So let me just put a big X, right? No trading in there. Here and here is where we want to be trading. Yeah, I can do that. I'm happy doing that. So let's have a look. Break a structure trade. Long, target, and entry. 1 to 2.1. And a short, entry, target, and stop loss. Throw on to 2.34. So that would be the two trade ideas on either side of the NZD USD. We don't like the middle, but we do like the outsides. So we'll have a go at those. It's a split. And we'll see where we end up. Right, USD CAD. Possible, very, very gradual state structure in this one. So no, definitely not the USD Swiss. USD China. No. USD Yen. Yeah. No, I don't need it. No, we don't need it. How many have we got now? Couple in gold, Aussie CAD, Aussie dollar, CAD yen, GA, NZD CAD, NZD USD. Both sides of the market trade ideas as well. I mean, we've got a lot to work with here, and we're only on Thursday at 2:06. So I'm going to leave that there, guys. We've got a couple of commodity ideas. We've got tons of FX space. Let's get onto our stock markets this afternoon and see what's cracking in there, because that's a lot to work with. Okay, so we've got about 23 minutes to go for our market open this afternoon. The yesterday open, it was not great. Took a loss and a win in the Dow and the Nas, or in the Nas and the Dow, respectively. But it wasn't great. It really wasn't. The sell-offs that came after were really nice in the evening. So 5 o'clock, 4:30, 5 o'clock, really nice big sell-off. Really beautiful rally back as well, deep into the Asia session in the NAS 100. The US 30 Dow Jones wasn't as consistent. The buyback was absolutely crap, for example, but the sell-off was okay. But these moves, team, are happening in the evening at the moment. It's very strange, very, very strange. But regardless of that, we do have some clear trading margins for our US assets today. For one, the US 30 Dow Jones long break of structure point is going to be here. And the short is naturally going to be directly underneath that at there. So that's your long and that's your short. The TP for the short on the Dow Jones is there. And the TP for the long in the NAS 100 is there. So very, very clear and pretty robust. NAS 100, sorry, US 30 Dow Jones. So remember, we're going to be breaking things down in a 1 minute time frame. So specifically, you will be looking at this area in here as your breaker structure point. Your entry for this trade idea is going to be approximately there. Your target profit is approximately 42.63, and your stop loss is probably going to be at around 42.52. That's what I would be doing myself in particular. So that's around a 1 to 2.7. Excellent. The one for the short, you want to get in underneath this most recent dip low. I'm not going to worry about this one here on the Wednesday rollover because that is what it is. But the breaker structure on that one is important to me, as that one there is at 11 o'clock in the morning today. So that's the low of the day, and that's the one we want to be watching out for. We need to clear those daily lows in order to get that bias really confirmed and on side. So entry point, stop loss, entry point target and the stop loss, which is going to be situated at about there for a 1 to 2.45. Two really nice, well-rounded trade ideas either side of the price equilibrium state structure that we're currently trading in. And then on to the NAS 100. The NAS 100, very different kettle of fish here today because of the sizable recovery that we've had all throughout the Wednesday evening into the Thursday morning and all day Thursday today. It has had a much better move to the upside, but in doing so, it's also more difficult to be able to ascertain the trading margins. For one, we have a very strong margin there, okay? Very strong point because of the fact we have this double inflection, triple inflection, quadruple inflection point that the market has been using the entire time. So we are now officially trading back inside the NAS 100 range. The ceiling to this is going to be about there as well. So this is actually really decent market margin, right? Really decent. We've got a lot of room to breathe here. But now, because of where we're trading, we're too far away from the breaker structure point. So we have to utilize a fresh breaker structure. So it's going to be really current in terms of where that is. So this area in here is where we're going to be looking to break long for the longs to the top of the range. So entry, target, and stop loss for a 1 to 2.38 for the NAS 100. And for the short, the margin is going to be down from here, which is your breaker structure point. And actually, no, it's not, is it? No, it's not. It's going to be there. That's the breaker structure point, isn't it? God, that was close. So breaker structure point is going to be there. And then we have our target profit, which is right down at the bottom. That's a big one. That's the base. So the short is much longer than the long. And so therefore the risk reward ratio will be greater as well. So target profit at 19,987. Entry point, nice margin, nice little margin below the zone there. And then the stop loss, which is going to be at about the 50% point between those two. Is going to yield a 1 to 2.71 versus the long, which is a 1 to 2.38. So that's your two trade ideas there in the NAS 100. Now, guys, I don't want you to forget, okay? The margin currently between price line and the entry point for the short is significant. It's big. NAS 100 is up on the day 0.6%. If we fall from this point in time down to our entry, that's a 0.71% decline, which means then we are going to be minus 0.11% down. So that's a really big move that the market has to make before we even consider the short taking place. If the market declines from where it is at the moment down to the TP of this one, we are looking at a minus 1.4% day. Ask me this, or let me ask you, what is the reason for the US stock market to sell off that significant today, of all days? We're on Thursday, the US jobs data came out. It's not significant, it's completely insignificant even. So there is no reason, unless something significant happens and comes out of Trump's mouth, or unless something like the US decides to go to war with Iran, then it's just not going to happen. And actually, in war times, sometimes stocks rally. temporarily, but it does happen. So yeah, there's a lot to consider. So we have to really bless me. There's a lot to consider here. Now, if I were a wise trader, I would be thinking to myself, if the market dips down and goes short, I'm going to utilize the 1 to 2.45 trade on the US 30 Dow Jones. If the market goes long, I'm going to utilize the 1 to 2.38 trade that I've got in the NAS 100. Why? Because the Dow Jones is much shorter to its short criteria than the NAS 100 is, which makes this kind of irrelevant. And the long is much closer to the NAS 100s than the US 30 Dow Jones, although in this case, not really. It is a bit, but not hugely. But that's the way I would set it up. So NAS 100 for short, US 30 Dow for long. And we utilize both the instruments that way. Okay, so that's my plan. That's what I'm going to do. Now I'm going to wrap things up there, ladies and gents. It's 2:15. You guys have got about 15 minutes to grab yourselves a coffee and whatever else before the market opens up this afternoon. Oh, sorry, Nadia. Sorry, just catching up here. I wasn't sure if I needed a retest of the big level before placing a pending. Which asset was that one? Sorry, bud. Aussie dollar. Aussie dollar. Let's have a look. Aussie dollar. Right, so do you need... What the hell? Yeah, so if we look at where we are, okay, this is the big inflection point, right? If we drag a zone across the bottom of that big inflection point there, and we drag that right, yeah, then what we've got here currently is the break close retest of that big level before the market starts to rally back. Now in this particular case, we've actually had a dip below it, but it didn't close. And it actually opened up at this point here. And that point there is about the 50% point of that trading margin, right? So we're good. We're absolutely fine. Didn't close below. If it closed down there, then we'd be in trouble. We'd have to wait for another retest. But this is the retest to this big inflection point here. And so therefore we're absolutely fine placing the pending order in above that because the retest has already happened. I should imagine that by the time we get to this order being triggered, we will probably have a retest of this level as well. I imagine we will look back on the chart and the chart would have come up and above, hit this breaker structure point, come down to retest this level, and then continued on from there. If the trade is successful, of course. It's only on the proviso that the trade actually, plays out. If it doesn't play out, then what will happen is the market will go through the breaker structure level, come back down to retest a bigger liquidity underneath, and it will take us out. That's what will happen, unfortunately. But it happens, especially in the bloody Aussie dollar, right? It's been a fickle one for us this week for sure. But yeah, that's it for me, guys. So you guys have got 14 minutes now. 14 minutes to go for your market opens. Good luck out there today. If you have any questions, please feel free to fire them into the chat as always. And I hope it all goes well. So take care, team. Good luck, trade safe, and I'll see you then. Thanks, guys. Bye-bye.